what investors can expect from European equities in terms of profits?
Well, I think investors are still quite optimistic about profits for European companies, but we think the environment is getting more difficult. The expectation has been that there will be a second half recovery in the macroeconomics in Europe, but we don't really see that playing out. We still see life continuing to be pretty tough, and I think you can start to see that in the data that's coming through right now. So we see expectations quite high for earnings, but actually we expect those earnings to be coming down in terms of expectations over the next sort of 6 to 12 months. That being said, there will be companies that will be able to do quite well in this environment, and we like to think that if we're owning the stronger companies with better business models and good prospects, so with access to growth in the emerging world, be it Asia, Latin America, or in the recovering United States, then those companies can still do quite well. But overall, we see expectations as being quite high, and we think in general companies will probably perhaps disappoint investors as we move through the rest of this year.
Do you see any value in stocks tied to domestic demand?
I think it's very tempting today when you look at the macroeconomics in Europe, and it is not good at all, really, to simply exclude domestic demand from your investment thesis. But I think it's really important, and at Aberdeen we are bottom-up stock pickers, to look at what companies actually do and how they make money, and the prospects for those companies and what their businesses are actually doing on the ground. And if you do that, I'm not saying that there are lots and lots of opportunities to take advantage of domestic positions in Europe, but there are some. There will be some companies that can actually do quite well and will benefit from a difficult economic environment in Europe in order to build and take share. A good example of that would be Associated British Foods, who own the Primark brand, a discount clothing chain based mainly in the UK, but which has actually been expanding very rapidly in places like Spain, opening at least a store a week. So you wouldn't have thought that anybody would be expanding rapidly in Spain right now, but actually they're taking advantage of the difficult economic environment to sell their very good value, good quality clothing range. Another example would be Svenska Handelsbanken, the Swedish bank, which is taking advantage of the difficulty that banks face across Europe to actually expand its retail presence in places like the Netherlands and the UK, taking advantage of the difficult position that many of the domestic banks in those markets face. So you can find businesses which are exploiting the difficult environment to do well for themselves, but you really have to look at each particular business case and not just generalize about markets or countries.
Do you see any value in financial services firms?
I think it's very difficult to invest in financial services businesses when the underpinnings of the financial system are at risk. I think that makes it very, very difficult. But that said, we do think that you can find interesting investments within the financial space, within Europe. We are big investors amongst the Scandinavian banks with Nordea and Svenska Handelsbanken, where we continue to see decent levels of growth, but also the opportunity to take share in commercial banking for Nordea from their European competitors who have had to focus on their own domestic businesses, and through someone like Svenska Handelsbanken looking to roll out its retail offering in an environment where, again, competitors are retrenching. We also see opportunities in the financial asset gathering space. And Prudential is a great example, the UK insurer, which has a huge business now based in Asia, really benefiting from the high savings rates there and the lack of welfare state and the high levels of GDP growth, and expanding its position significantly. And we also have investments in things like Schroders, the asset management company, which again is a very, very strong business, very strong franchise, opportunities to gather assets across Europe and indeed globally. So there are opportunities for investors within the financial services space, but you have to be very selective. Now, at Aberdeen, we're long-term investors. When we invest in a company, we're taking a 5 to 10-year view. As a result, we're really looking to go with companies that can benefit from those kind of trends and environments. We're not the kind of people who are thinking, is it a good idea to own a European bank for the next quarter or the next month? That's not really our approach. When we make an investment, we want to own it for the long term. We want to be able to see long-term growth prospects behind it.
You think extreme risks are off the table now?
Well, volatility in markets today is extremely low. which doesn't really correspond, I think, with the fact that I think there are still significant potential risks that do sit outside there in the system. I think Cyprus is an interesting example where actually the pressures within domestic economies in Europe are still there. We haven't really come up with any long-term solutions to the challenges that we face right now of slow levels of growth, difficult demographics, and a financial structure that isn't really ideal. We haven't come up with permanent, long-lasting solutions to those problems, and yet markets seem very relaxed, and I think politicians seem very relaxed. The focus on finding solutions has moved off the agenda, but I don't think looking forward over the next 2, 3, 4, 5 years that those problems have gone away, and they will need to be addressed. And it seems to my mind quite likely that we will at least see periods in the future where those concerns will come back to the fore again. So I think those potential risks still reside. That being said, I don't think investors in European companies should get too upset about that, because the companies in which you can invest actually have the opportunity to benefit from the global opportunity set, not just the domestic politics. But could the domestic politics and domestic economics sort of see a resurgence of risk? Absolutely.